Imagine a world powered by technologies so fundamental they underpin national security, enable life-saving medical treatments, and even set the stage for humanity's journey to the stars. Yet the companies at the very cutting edge of these critical innovations often operate kind of behind the scenes, largely unseen. How much do we really know about them? Today, we're taking a deep dive into BWX Technologies, Inc., commonly known as BWXT.
Right, BWXT, a name many might not know, but definitely should.
Exactly. This isn't just a company, it's a powerhouse, really, at the very heart of nuclear technology. It holds a near-monopolistic position within the U.S. defense industrial base. And at the same time, it's aggressively expanding. We're talking commercial nuclear power, cutting-edge medical isotopes, and even advanced space exploration.
It's quite the portfolio. You've got this incredibly stable defense core, and then these really forward-looking growth areas.
It really is. It's a company born from, well, the crucible of national defense, now boldly charting a course into the future of clean energy and medicine. It's a story of strategic evolution few companies can tell, you know?
hmm A really unique trajectory.
So our mission for you, the listener, is to understand not just what BWXT does on the surface, but why it's so uniquely positioned, what truly drives its impressive growth, and, what crucial factors will shape its trajectory in the years to come. Think of this as your shortcut to being incredibly well-informed on a truly fascinating and complex company that often flies under the radar.
Yeah, definitely one worth understanding.
Okay, let's unpack this then. When we typically think about national security or, say, clean energy, a name like BWXT might not immediately spring to mind, right? But it absolutely should. They are truly fundamental to so much that's happening right now, operating at the deepest levels of critical infrastructure. What's fascinating here is how they manage this incredible duality. On one hand, you've got this stable, essential government business that acts as a financial fortress almost. And on the other, these incredibly dynamic, forward-looking commercial ventures that represent, significant future growth opportunities. That's a masterclass in strategic balancing, really. Few companies possess the unique capabilities and the foundational stability to simultaneously manage such critical, low-risk, long-term government programs, while also making substantial, long-horizon investments in emerging, high-growth commercial markets. It truly speaks volumes about their inherent strengths and the strategic importance of their work globally.
That makes complete sense, and that strategic importance is clearly a core part of their value proposition. So let's start with the bedrock of BWXT, its government operations segment. This isn't merely a part of their business, it's the undisputed core, the very foundation upon which everything else is built. It represents the majority of their total revenue and, actually, an even larger share of their overall profitability. Their role here is, quite frankly, unparalleled.
It really is the engine room.
It is. Specifically, they are the sole source designer, engineer, and manufacturer of mission-critical nuclear components, reactors, and fuel for the U.S. Navy's entire nuclear-powered fleet. We're talking about the formidable propulsion systems for the silent guardians of our seas, the Virginia-class and Columbia-class submarines, the backbone of our strategic deterrence, and also for the massive Ford-class aircraft carriers, which are essentially floating cities of power and projection enabling global reach. This isn't just about building parts, it's about providing the very heart of these vessels. It makes it truly mission-critical to U.S. national security. Without BWXT, the U.S. Navy's nuclear fleet simply couldn't operate as it does.
Right. And if we connect this to the bigger picture, this isn't just a conventional customer-supplier relationship. It's a profound symbiotic dependency. The U.S. Navy relies on BWXT as its only supplier for these absolutely critical systems. And BWXT, in turn, relies on the Navy for the majority of its revenue. This unique arrangement creates incredible stability and long-term revenue visibility for BWXT, but it also introduces a highly concentrated customer base, a reliance on a single, albeit extremely powerful and stable, customer. It's a delicate balance, of mutual dependence.
And when you say sole source, it really underscores their competitive moat, doesn't it? Could you elaborate on how exactly that translates into a competitive moat that's truly unassailable? What are the specific barriers to entry that protect them?
Absolutely. This position is virtually unassailable for several, profound reasons. Firstly, there are the immense national security implications. Given the sensitive nature of nuclear propulsion for military applications, the U.S. government simply cannot allow just any company to enter this space. Trust, security clearances, decades of proven reliability, they're non-negotiable.
Okay, so trust and security are paramount.
Exactly. Secondly, the technical complexity involved in designing, engineering, and manufacturing these highly precise, mission-critical nuclear systems is extreme. We're talking about proprietary knowledge accumulated over, what, 70 years. State-of-the-art specialized facilities that cost billions to build and maintain, and manufacturing processes that are unique to BWXT. It's a field with an incredibly steep learning curve and almost no margin for error.
So it's not just about having the money, but also the patience and the proven expertise to meet those standards, plus that unique trust from the government.
Precisely. And that leads to the third barrier, the decades-long relationship with the U.S. government. This partnership spans generations, cementing an institutionalized dependency that is incredibly difficult for any new entrant to replicate, even if they had the technical capabilities and capital. This sole source status, combined with the criticality of their output, grants BWXT significant pricing power and unparalleled long-term revenue visibility, stretching out for years, even decades into the future. They know what's coming, giving them a remarkable foundation.
That level of visibility is almost unheard of in the industrial sector. How does BWXT's position compare to other global players in naval nuclear technology? Are there others doing similar things elsewhere?
Well, yes and no. To put it in perspective, while other major global players like Rolls-Royce in the UK, Framatome in France, or state-owned enterprises like Russia's Rosatom and China's CNNC exist in the naval nuclear space internationally, none of them compete for U.S. contracts. BWXT's position within the U.S. defense industrial base is truly unique and deeply embedded. They are an indispensable partner, not just a vendor.
Okay, so a unique U.S. focus there.
Right, and their expertise extends beyond just naval propulsion. They also manage and operate high-consequence nuclear weapon sites, national laboratories, and manufacturing complexes for the U.S. Department of Energy, or DOE, and the National Nuclear Security Administration, and NSA. Think about vital facilities like the Pantex plant in Texas. That's the nation's primary facility for assembly and disassembly of nuclear weapons. Or the Hanford site in Washington, which is undergoing massive environmental cleanup and nuclear waste management. BWXT's revenue and profitability from these operations are tied directly to U.S. defense spending, shipbuilding schedules, and, importantly, their performance scores on these complex long-term contracts.
Right, performance matters. Okay, here's where it gets really interesting. While that government business provides incredible stability, a financial fortress, as some might call it, BWXT isn't just sitting still. They're strategically leveraging that foundational strength and their, well, deeply ingrained technical expertise to push into some truly transformative commercial markets. So what does this all mean for their expansion beyond the defense sector? What's driving this ambitious push?
Well, this raises an important question. What's driving this expansion? BWXT is right at the center of what many are calling the nuclear renaissance. It's a global resurgence in interest and investment in nuclear technology, driven by multiple powerful long-term secular trends reshaping the global energy and healthcare landscapes. This isn't just a fleeting trend, it's an inflection point for nuclear power.
And these drivers are absolutely fundamental, aren't they? First, we have the dual imperative of decarbonization and energy security. Nuclear power stands out as a critical source of clean, carbon-free electricity available 247 year-round. Unlike intermittent renewables like solar and wind, nuclear provides that essential baseload power crucial for grid stability. It's that reliable, always-on source.
Always on, exactly. Critical for the grid.
And on top of that, geopolitical events, especially the conflict in Ukraine, have profoundly highlighted the strategic importance of energy security and independence. Many nations facing volatile fossil fuel markets and supply chain disruptions are now reevaluating or actively expanding their nuclear programs to reduce reliance on external energy sources. It's fascinating how over 30 countries have now formally committed to including nuclear power as a key component of their decarbonization strategies, recognizing its dual role, in climate action and national security.
Precisely. And adding to that, we're seeing an unprecedented surge in global electricity demand. Forecasts from various energy agencies suggest it could nearly double by 2050, driven by conventional factors like population growth, increasing urbanization, and the widespread electrification of transport and industry. But here's a specific, captivating detail. The exponential growth of energy-intensive technologies like artificial intelligence, AI, and the proliferation of large-scale data centers. These are creating a massive new source of demand for continuous, reliable power.
AI's power needs. That's huge.
It is. Projections from organizations like the Electric Power Research Institute indicate that data centers alone could account for a staggering 12% of total U.S. electricity consumption by 2028. That's up from just a few percent today. This is a game changer for reliable power sources like nuclear, which can provide the always-on, high-density power these facilities desperately need.
That's a huge, almost hidden impact from AI. And it's not just market demand. There's significant governmental and private sector support, too, creating a truly favorable policy environment, right?
Absolutely. We're seeing streamlined licensing processes from regulatory bodies like the U.S. Nuclear Regulatory Commission, the NRC, and the Canadian Nuclear Safety Commission, the CNSC. There are also substantial financial incentives, tax credits, direct funding for advanced nuclear tech. For instance, in 2024 alone, over $3 billion was directed toward R&D for small modular reactors, SMRs, from both public and private sources. This favorable policy environment is actively encouraging the deployment of new nuclear technologies, creating fertile ground for companies like BWXT to thrive.
Okay, so the wind is really at their backs in many ways.
You could say that. And all of these factors feed directly into BWXT's commercial operations segment, which is a diversified portfolio targeting these non-defense markets. It's important to remember, though, that this segment, while ambitious, is largely funded by the stable, high-margin government business. That allows BWXT to make these long-term, capital-intensive investments without undue financial strain. It's a strategic use of their fortress of capital, as you called it earlier.
Right, funding the future from the present. Let's drill down into their specific commercial ventures, starting with commercial nuclear power. They're active in a few key areas here, aren't they? Both existing stuff and the new wave.
Yes, they are. Firstly, with existing reactors, BWXT manufactures heavy components like steam generators and heat exchangers, particularly for the Canadian CANDU reactor market. The CANDU reactor is a unique heavy water design known for its on-power refueling, meaning it can refuel without shutting down, which enhances efficiency.
Oh, okay, so specialized components there.
Exactly. And beyond manufacturing, they also provide comprehensive life-of-plant services. Think reactor maintenance, inspections, life extensions, basically, keeping existing nuclear power plants running safely and efficiently for decades beyond their initial design life. A specific example is their multi-year, multi-billion-dollar support for the life extension of the Pickering Nuclear Generating Station in Ontario, Canada. That's operated by Ontario Power Generation, OPG, one of North America's biggest nuclear facilities. And to strategically bolster these services and capture more of that recurring revenue, they recently acquired Kinetrix Inc. in May 2025. That significantly expanded their capabilities in specialized tooling and services for nuclear plant maintenance.
That sounds like a solid recurring revenue stream, crucial for supporting existing infrastructure. But what about the new frontier, like small modular reactors, SMRs? I hear a lot about SMRs as the future. What's BWXT's play here? Are they developing their own?
Good question. For SMRs, BWXT has adopted what we call a picks and shovels strategy. They aren't developing their own SMR design, which would be incredibly capital-intensive and, frankly, risky. Instead, they're positioning themselves as the premier component manufacturer, effectively the foundry, for multiple leading SMR designs.
The Intel Inside approach, kind of?
Kind of like that, yes.
Yeah.
It's shrewd because it mitigates the risk of backing a single technology in an emerging competitive market. Regardless of which specific SMR design ultimately dominates, BWXT aims to be the indispensable supplier of critical complex components for all of them. For instance, they're manufacturing the first reactor pressure vessel for the GE Hitachi BWRX-300 design. That's slated for deployment at Ontario Power Generation's Darlington site in Canada and TVA's Clinch River site in the U.S. They're also actively collaborating with other leading SMR developers like TerraPower and Rolls-Royce SMR, anticipating multiple follow-on orders as these designs move from demonstration to commercial deployment.
So they're providing the foundational building blocks for the whole SMR industry. Sounds like a very smart way to de-risk their entry into a nascent market. And even for traditional large-scale new builds, they're still involved.
Not at all out of the picture. BWXT has a memorandum of understanding with Westinghouse to manufacture components for their AP1000 and AP300 reactor designs. Those are some of the most advanced large-scale designs being considered globally. However, it's crucial to acknowledge this commercial nuclear market is significantly more competitive than their sole-source government business. They face established global players, GE Hitachi, Westinghouse, Framatome, Doosan Enerbility, plus newer entrants like NuScale and Rolls-Royce SMR, all vying for market share in this burgeoning nuclear renaissance. Their success here depends not just on manufacturing excellence, but also on competitive pricing, delivering on schedule, and leveraging their deep technical differentiation.
Right, competition is tougher there. Okay, moving beyond energy, BWXT has another fascinating growth area, BWXT Medical. This sounds like a completely different frontier, using nuclear expertise for human health. What exactly are they doing in radiopharmaceuticals? How does it connect?
Yeah, BWXT Medical is indeed a high-growth business focused on producing and supplying critical medical radioisotopes and radiopharmaceuticals.
Yeah.
This leverages their core competency in handling and processing radioactive materials, but for a completely different purpose, diagnosing and treating diseases. Their portfolio includes diagnostic imaging agents like technetium-99 meter generators, widely used for various medical scans. Although the commercial launch of that particular product has faced technical challenges and has been delayed beyond 2025, it remains a key long-term target.
Okay, so some bumps there, but still a focus.
Right. More excitingly, perhaps, they also produce therapeutic products for cancer treatment. A prime example is lutetium-177 irradiation, which recently received approval from the Canadian Nuclear Safety Commission. It's used in targeted alpha therapy, a powerful new approach to treating various cancers. They also have their established TheraSphere product line, which is specifically used for treating liver cancer by delivering radiation directly to tumors.
That's incredible, going from powering submarines to, well, potentially saving lives with radiation. And what's driving the market for these medical products? Is it growing?
Oh, definitely. The market dynamics here are very favorable, a powerful secular tailwind. It's largely driven by an aging global population, which naturally leads to a higher incidence of diseases like cancer and cardiovascular conditions. Alongside this, there's the increasing adoption of nuclear medicine for diagnosing and treating these diseases, as the precision and efficacy of radiopharmaceuticals become more widely recognized. The global market for medical isotopes is projected to grow at an 8.8% compound annual growth rate, CAGR, meaning consistent annual expansion. It's expected to reach an estimated $11.4 billion by 2032. This provides a significant growth opportunity for BWXT that is largely independent of defense and energy markets, offering valuable diversification and a different risk-reward profile. However, similar to commercial nuclear, this market is fragmented and competitive. You've got players like Nordion, Curium Pharma, Lantheus Holdings, GE Healthcare, and Northstar Medical radioisotopes all vying for market share.
Okay, another growth area, but again, with competition. It's clear they're leveraging their nuclear expertise across a broad spectrum of critical applications. What about advanced technologies like space and beyond? Are we talking science fiction here, or is this truly something tangible and near term?
Not science fiction at all. This is cutting-edge reality. And it's a field where BWXT's deep nuclear expertise gives them a significant advantage. They are actively developing next-generation nuclear technologies for entirely new applications that are pushing the boundaries of what's possible. A major project, for example, is Project Pele. They are manufacturing the reactor core for a transportable microreactor for the U.S. Department of Defense. The aim here is to provide resilient, reliable power for remote military bases, allowing them to operate independently of vulnerable fuel supply lines. It offers critical energy independence in challenging environments. Think tactical energy advantage.
Tactical energy.
Yeah.
Interesting. And space nuclear propulsion. That sounds like something straight out of a sci-fi movie, but I understand it's becoming a serious focus for NASA and the U.S. Space Force.
It definitely has that feel, but it's very real and very critical for future space exploration. BWXT is an active participant in developing space nuclear propulsion, or SNP. It's seen as a critical enabling technology for future deep space exploration, including NASA's ambitious Moon-to-Mars missions. The benefit is immense. SNP offers the potential for much faster transit times to distant planets and significantly larger payload capacities compared to conventional chemical rockets. Imagine drastically reducing travel times to Mars from months to weeks. That minimizes astronaut exposure to radiation and logistical challenges.
Wow. Months to weeks. That's a game changer.
Absolutely. For instance, they're collaborating with Lockheed Martin on the U.S. Space Force's JETSON Nuclear Electric Propulsion Demonstration Project, contributing their expertise in reactor development and advanced manufacturing. The overall space propulsion market is projected to grow over 12% annually to $26 billion by 2032. And nuclear technologies are poised to capture a growing share over the long term, especially for missions needing high power and speed.
That sounds incredibly exciting, with potentially transformative impacts on defense and space exploration. But it also sounds pretty high risk, given these are entirely new frontiers. What's the timeline and the associated risk?
You're right to point that out. These are long-duration R&D programs. They carry considerable technological risk and government funding risk, too. The development cycles are long, often spanning a decade or more. Material revenue contributions from these advanced technologies are not expected for several years, possibly not until the early 2030s for some applications. So while the potential is transformative, the payoff is long-dated and dependent on continued government funding and technological breakthroughs. They're also developing advanced fuels, including trisonuclear fuel that's a highly robust advanced form of nuclear fuel designed for extreme temperatures and pressures, making it ideal for advanced reactors. And they're also establishing capabilities to produce high-assay, low-enriched uranium, or HALEU. That's a specialized nuclear fuel required for many next-gen reactor designs, and crucially for space applications due to its higher energy density.
HALU, another key piece of the puzzle. And with all these diverse operations, from naval reactors to space propulsion, they must have a significant global footprint. Can you give us a sense of their operational scale?
They absolutely do. BWXT operates 20 major sites across the US, Canada, and the UK, employing nearly 10,000 highly skilled people. Key manufacturing facilities include their Lynchburg, Virginia complex that's central to their government and advanced fuel work, and Cambridge, Ontario, which serves the commercial nuclear market and is currently undergoing a significant expansion for SMR component manufacturing and other commercial projects. They also manage Canadian nuclear laboratories through a joint venture, marking their first international foray into the specific line of business, further solidifying their global reach in nuclear services.
All right, we've explored what they do and where they're going from the deepest oceans to deep space. It's quite a range. But for you, the learner, understanding the financial health and competitive landscape is key to really grasping the so what of this deep dive. Let's talk about the money and the moats that protect their business.
Right. And what's fascinating here is how BWXT's market position is protected by some of the most formidable barriers to entry in the entire industrial sector. These aren't just singular advantages. They form a layered defense, making it incredibly difficult for any new company to challenge them. Firstly, there are extremely strict and complex regulatory and certification hurdles. The nuclear industry is governed by bodies like the US NRC and the Canadian CNSC. They enforce incredibly stringent safety, environmental, and security standards. Obtaining these licenses and certifications is incredibly time-consuming, capital-intensive, and requires a proven multi-decade track record of impeccable safety and quality. This alone creates a significant structural barrier for new entrants.
So it's not just about having the money, but also the patience, the bureaucratic navigation, and the proven expertise to meet those standards. Essentially, a very high bar for entry.
Exactly. Secondly, their technical expertise and intellectual property are immense. Their history traces back to the Manhattan Project, giving them an unparalleled repository of proprietary knowledge, advanced design capabilities, and unique manufacturing processes that are difficult, if not impossible, to replicate. This includes specialized welding techniques for large nuclear components, advanced material science, precise fuel fabrication. Their workforce consists of highly skilled engineers, scientists, and technicians, many of whom require U.S. government security clearances, which further narrows the available talent pool and makes their human capital a key competitive asset. This is a business built on highly specialized knowledge accumulated and refined over decades.
Decades of know-how. So how does this all translate into their financials? They've shown a consistent track record of growth and profitability, clearly anchored by that stable government business. What do the recent numbers look like?
Well, looking at their recent performance, they've achieved steady revenue growth. Trailing 12-month sales reached $2.86 billion. Their second quarter of 2025 was particularly strong, showing consolidated revenue up 12% year-over-year, hitting $764 million.
12% growth? That's solid.
It is. Both segments contributed. Government operations grew a solid 9% to $589 million, and commercial operations expanded an impressive 24% to $176.1 million. Based on this performance and a strong backlog, the company even raised its full-year 2025 revenue guidance to approximately $3.1 billion. That's a significant vote of confidence in their near-term outlook.
Okay, revenue strong. What about profitability margins?
Indeed, the profitability figures are equally telling and highlight their financial strength. On a consolidated basis, BWXT maintains healthy margins. Recent trailing 12-month figures show a gross margin of 24.26%, operating margin of 11.25%, and net profit margin of 10.28%. Their adjusted EBITDA earnings, before interest, taxes, depreciation, and amortization, a key measure of operational profitability for Q2 2025, was $145.9 million. That's a 16% increase from the prior year, yielding a consolidated adjusted EBITDA margin of 19.1%.
19% adjusted EBITDA margin overall. Pretty healthy, but I understand there's a crucial disparity between the segments, especially when it comes to profitability. This seems like a really important nuance for the listener to grasp. Can you break that down? Why the difference?
Yes, this margin differential is absolutely critical to understanding their overarching strategy and financial dynamics. In Q2 2025, The government operations segment generated a robust 22.6% adjusted EBITDA margin. This reflects its sole source, mission-critical status, and its mature, efficient operations. In stark contrast, the commercial operations segment produced a significantly lower 9.2% adjusted EBITDA margin in the same quarter.
Wow, 9.2% versus 22.6%. That's a big gap.
It is, and that 9.2% was down notably from 15.9% in the prior year. Management attributed this compression to an unfavorable revenue mix specifically, a lower contribution from higher-margin field services work due to project timing combined with increased spending on growth investments within the commercial segment. This highlights that the mature, high-margin government business is essentially funding the expansion of the lower-margin but higher-growth commercial ventures. The challenge and a key factor to watch is whether those commercial margins can expand significantly as the business scales and achieves greater efficiency. Otherwise, it could gradually dilute overall corporate profitability even as revenue grows.
That's a really important strategic point. Using the cash cow to fund the future, but needing that future to become more profitable over time. What about cash flow? Are they generating enough cash to fund all these ambitious projects and investments without straining the balance sheet?
They absolutely are. BWXT has demonstrated a strong ability to convert its earnings into robust cash flow, which is crucial for funding their growth initiatives. In the second quarter of 2025, they generated a remarkable free cash flow, or FCF, of $126.3 million. That represents a massive 256% increase from the prior year period.
256% increase. That's huge.
It is. This strong performance, driven by higher net income combined with effective working capital management and the favorable timing of contract awards, led management to raise its full-year 2025 FCF guidance to a range of $275 million to $285 million. This robust cash generation gives them significant financial flexibility to pursue strategic objectives like capital expenditures and acquisitions without excessive reliance on external capital markets or taking on undue debt.
And how strong is their balance sheet in general, given these investments and the debt they might carry?
The balance sheet looks solid and appears well managed for a company of its type. As of early August 2025, their total debt was approximately $1.53 billion against total shareholder equity of $1.18 billion. That results in a debt-to-equity ratio of about 1.29x. This is a reasonable level, especially for a company with such stable, predictable cash flows from its government business. Their liquidity position is also healthy, with a current ratio of 1.69x, indicating ample current assets to cover short-term liabilities. Furthermore, their debt service capability is strong. They have an interest coverage ratio of 9.2x, meaning their operating earnings are more than 9 times the amount needed for annual interest payments. This robust financial structure truly supports their ongoing investments and strategic acquisitions, giving them a foundation of financial resilience.
Okay, financially sound. So what does this all mean for future revenue visibility? A key indicator we often look at is their backlog, and I hear it's at a record high. Can you tell us more about that? What does it signify?
Yeah, this backlog provides exceptional visibility. It's really a cornerstone of their investment case and provides a significant degree of de-risking for future revenues. As of the end of the second quarter of 2025, BWXT's total backlog reached an unprecedented $6.0 billion.
$6 billion.
Wow. Exactly. This marks a massive 70.2% increase from the same period in the prior year and represents approximately 2 years of forward revenue based on their updated 2025 guidance. That kind of long-term visibility is truly rare in most industries.
That's incredible visibility. How is that backlog composed across their segments, and what specific drivers fueled such a dramatic increase?
It's remarkably well diversified across both operating segments, which adds to its quality. The government operations segment accounts for a substantial $4.4 billion of the backlog. The commercial operations segment contributes $1.6 billion. The dramatic increase was fueled by robust bookings across the business. Most notably, over $1.0 of the increase came from a new, multi-year $2.6 billion pricing agreement for naval nuclear reactor components for the U.S. Navy. That massive contract underpins their core business for years to come. The commercial backlog was also significantly bolstered by new contracts for SMR components, critical plant life extensions for existing reactors, and the inclusion of approximately $240 million from the recent Kinetrix acquisition, which immediately added to their service contract pipeline.
That sounds like very high-quality revenue visibility, especially the government portion. But a backlog isn't a profit guarantee, is it? What are the nuances or potential risks there?
You're absolutely right to point that out. While this backlog provides exceptional visibility, especially the government portion, tied to high-priority national defense programs, extremely unlikely to be canceled. It's not a direct guarantee of future profits. The company primarily operates on fixed-price contracts for many of these large programs. This means BWXT bears the risk of cost overruns if project complexities, supply chain issues, or labor challenges increase the actual cost of execution beyond initial estimates. So strong operational execution, efficient project management, and disciplined cost control are absolutely crucial to converting that backlog into profitable revenue. It's a measure of future revenue, but profitability still depends heavily on their performance.
Execution is key.
Yeah.
All right, let's pivot slightly to how they're deploying their capital and what challenges they're facing in this dynamic environment. First, their capital allocation strategy. How are they balancing reinvestment for growth with direct returns to shareholders?
BWXT's capital allocation strategy demonstrates a clear and, let's say, disciplined balance. They have a very consistent and growing dividend policy. They've increased their dividend for 10 consecutive years now. The annual dividend per share was stable 96 cents in 2024, and the current payout ratio is approximately 31% of earnings. This is a moderate and sustainable level. It shows strong confidence in future earnings and provides a significant cushion, ensuring the majority of profits are retained for reinvestment in the business to fund those long-term growth initiatives we discussed.
Okay, so a reliable dividend grower. What about share repurchases? Are they actively buying back their own stock?
Share repurchases are used as a more opportunistic tool in their capital allocation strategy, it seems. For example, they were quite active back in 2018, repurchasing $215 million worth of shares. But more recently, in 2024, they repurchased a more modest $20 million in stock. This suggests that while share repurchases are an option, the company is currently prioritizing growth. Capital is being directed more towards strategic acquisitions and internal capital expenditures, or CapEx, to capture those long-term opportunities in commercial, nuclear, medical, and advanced tech markets. It indicates a focus on building future capacity rather than solely returning cash right now.
Building for the future makes sense. Speaking of acquisitions, they've made a couple of strategic targeted moves recently. Can you elaborate on the rationale behind these bolt-on deals?
Yes, disciplined, targeted bolt-on deals seem to be a key part of their M&A strategy. They're designed to fill specific capability gaps or expand their market reach in a focused way. In May 2025, they closed the acquisition of Kinectrics, Inc. That significantly strengthens their commercial life-of-plant services. Kinectrics brings specialized tooling, expertise in reactor inspections, and advanced maintenance capabilities that directly bolster BWXT's offerings to existing nuclear power plants and life extension projects. Makes that recurring revenue stream even more robust. Then, in January 2025, they acquired Aerojet Ordnance Tennessee. That expanded their defense materials capabilities, enhancing their ability to produce specialized components and materials crucial for various defense applications. It further integrates them into the broader defense supply chain beyond just naval nuclear. These aren't massive transformational acquisitions, but they're highly strategic, designed to fill specific capability gaps, expand their addressable market, and strengthen their competitive positioning in key growth areas.
Smart, focused additions. And what about their capital expenditure priorities for the next year or two? Are they spending a lot to build out new capacity to meet this growing demand and backlog?
They are currently in a phase of elevated capital investment, definitely reflecting their confidence in future growth. For 2025, capital expenditures are guided to be between 5.5% and 6.0% of sales. That's a significant level of investment for an industrial company. The primary focus of this spending is the expansion of their Cambridge, Ontario manufacturing facility. That's being scaled up specifically to produce large components for the commercial nuclear market, including SMRs and components for plant refurbishments. This elevated investment is a direct response to the strong demand signals and that record backlog across their businesses, preparing them for the next wave of nuclear infrastructure development.
Gearing up for growth. Okay.
But even with such a strong strategic position and clear growth drivers, no company operates in a vacuum, right? BWXT has faced its share of macroeconomic headwinds and operational dynamics, just like any other large-scale industrial manufacturer. For instance, on the macroeconomic front, they've cited pressure from zirconium costs in the first quarter of 2025. Zirconium is a critical material for nuclear fuel and components, and rising prices impact their cost of goods. While they expect these pressures to ease in the second half of the year due to long-term supply agreements and internal efficiencies, it highlights the ongoing challenge of raw material inflation. They also face persistent supply chain vulnerabilities, relying on a limited number of highly specialized and, in some cases, single-source suppliers for critical components. While there haven't been major disruptions reported that significantly impacted backlog realization, it remains an operational risk requiring active management and strategic sourcing.
And we talked about the margin compression in their commercial segment earlier. Is that directly related to operational execution or other factors? What's the story there?
It is, partly. The significant margin compression in commercial operations falling to 9.2% in Q2 2025 from 15.9% the prior year was attributed to two main factors: an unfavorable revenue mix and increased growth investments. The timing of projects meant a lower contribution from higher-margin field services work as some large, high-value refurbishment projects cycle through. Simultaneously, BWXT is aggressively investing in scaling up its commercial nuclear and medical businesses. That means higher upfront R&D costs, facility expansion costs, and hiring costs before those revenues fully materialize and achieve economies of scale. It really highlights the complexity of managing a diverse business portfolio with varied margin profiles and project-based revenues. It's a challenge to scale the growth businesses while maintaining overall corporate profitability. It's something to monitor closely. Can commercial margins expand as these businesses mature?
Right, a key thing to watch. On a more positive note, though, the evolving government policy and geopolitical context seem to be creating significant tailwinds for them, don't they? Especially in the wake of recent global events.
Absolutely. There's strong bipartisan support in the U.S. for modernizing the nation's nuclear deterrent and expanding the naval fleet. This translates into stable, long-term funding for the Columbia-class and Virginia-class submarine programs, which directly drives BWXT's core government business. Beyond that, the U.S. government has launched new initiatives to strengthen domestic nuclear capabilities, like programs to onshore the nuclear fuel supply chain, particularly for HAU, reducing reliance on foreign suppliers. There's also increased funding for advanced nuclear technologies for both terrestrial and space applications, Project Pele, various space nuclear propulsion projects. These create significant new growth avenues and long-term research contracts for BWXT, positioning them right at the forefront of these strategic national initiatives.
And the geopolitical landscape globally, especially the war in Ukraine, seems to have fundamentally shifted the narrative around nuclear power, hasn't it?
It truly has. The war in Ukraine has fundamentally shifted the global conversation around energy security and independence. This has led many Western nations, particularly in Europe, to accelerate their plans for new nuclear power generation to reduce reliance on Russian energy, which was previously a significant source of natural gas. This geopolitical tailwind has significantly improved the long-term demand outlook for the entire nuclear supply chain, directly benefiting BWXT's commercial operations. It creates opportunities for them and their partners to replace or avoid reliance on Russian nuclear technology, which has long dominated parts of the global market. This shift has given nuclear power a renewed strategic importance beyond just decarbonization.
Okay, so some strong tailwinds counterbalancing the challenges. It sounds like a fascinating picture, blending deep stability with ambitious growth. But for you, the listener, it's just as important to understand the potential downsides. What could impact their trajectory? What are the key risks to be aware of when looking at BWXT?
Well, the primary risk, as we've touched upon, is that extreme customer concentration. Their profound dependence on the U.S. government, particularly the Department of Energy and the U.S. Navy, means any significant change in defense spending priorities, like a shift away from large naval fleets toward, say, cyber warfare or space-based assets, or a reduction in the planned size of the nuclear fleet, or even a shift in procurement strategy, however unlikely currently, could gradually erode their long-term revenue visibility and have a material adverse effect on the company's financial results.
The big customer risk. And even with that record backlog, there are inherent risks involved in actually realizing that revenue profitably, right? It's not guaranteed cash.
Yes, exactly. While the backlog is at an unprecedented high, there's no absolute guarantee all projected revenue will be realized or that it will be profitable. Government contracts can be modified, delayed, or even canceled due to budget constraints or policy changes, although for mission-critical programs, this is rare. And a significant portion of BWXT's work is performed under fixed-price contracts. On these, BWXT bears a risk of cost overruns if project complexities, supply chain disruptions, or labor challenges increase the actual cost of execution beyond initial estimates. This could negatively impact profitability if not managed extremely well. We also have to consider ongoing supply chain disruption risks, given their reliance on limited or single-source suppliers for unique components.
And for a company that relies so heavily on specialized knowledge and security clearances, human capital must be a significant risk area too.
Absolutely. The loss of key personnel is a significant operational risk. BWXT's success depends on a highly skilled, educated, and trained workforce engineers, scientists, technicians with unique expertise. Many positions require stringent U.S. government security clearances, which severely limits the available talent pool. The inability to attract and retain these qualified employees in a competitive labor market could materially harm the business. And given their involvement in national security and sensitive nuclear tech, cybersecurity threats are also a major concern. They're a high-value target for sophisticated attacks, which could lead to IP theft, operational disruption, or compromise of sensitive government information.
High stakes there. On the regulatory and political side, what specific risks stand out that could affect their operations or future projects?
Well, the government budget and appropriations process is a continuous risk. Their government business is entirely dependent on annual U.S. budget cycles and congressional appropriations. Political gridlock, changes in administration, or shifts in national security strategy could lead to delays or reductions in funding for key programs, even critical ones. Then there's nuclear regulatory compliance itself. BWXT's operations are subject to incredibly stringent safety, environmental, and security regulations from agencies like the NRC and CNSC. Non-compliance, even minor, could result in fines, increased oversight, or even the suspension of operations. A significant safety or environmental incident, however unlikely given their track record, could have devastating consequences for the company's reputation, financial stability, and even public acceptance of nuclear technology more broadly.
And related to that, the environmental and nuclear liability, just given the nature of the materials they work with.
Exactly. The handling, transportation, and disposal of radioactive and hazardous materials expose the company to significant potential liabilities. While indemnification is provided under laws like the Price-Anderson Act in the U.S., which limits liability for nuclear incidents, this coverage may not apply to all potential liabilities or for all operations. An incident not covered could result in substantial damages and legal costs. It's an inherent risk of operating in this specialized field.
Okay, so operational, financial, regulatory risks. What about competition and technology? You mentioned the government side is almost a monopoly, but commercial is different.
Right. And while their government business is a near monopoly, the commercial markets are fundamentally different. This raises an important question. Can they sustain their competitive edge in these areas, given the broader competitive landscape? There's intense competition in the commercial, nuclear, and medical isotope markets. Competitors, many of whom are global industrial giants, may have greater financial resources, different technological approaches, or more established market positions in specific subsegments. Then there's technological disruption. The field of advanced nuclear tech is evolving rapidly. Many innovative SMR and microreactor designs are emerging. There's a risk that competing designs, perhaps not using BWXT components, could gain a decisive technological or cost advantage, potentially diminishing the market for the designs BWXT is equipped to supply. Similarly, new, more efficient or cheaper methods for producing medical isotopes could emerge, challenging BWXT Medical's market position. Finally, there's execution risk on these new technologies. Their ventures in advanced areas like space nuclear propulsion and microreactors are long-term, high-risk endeavors. Commercial success isn't guaranteed. It depends on overcoming significant technical challenges, securing regulatory approvals, and achieving widespread market acceptance, which, as we said, can take many years.
Lots to consider there. So for those trying to piece this all together, how do we even begin to think about valuing a company with such a unique blend? Stable, almost monopolistic government work versus these high growth, but often long horizon commercial ventures. It's not straightforward, is it?
No, it really isn't. And what's fascinating here is that standard valuation metrics need a highly nuanced approach for BWXT. With a market capitalization around $14.1 billion as of early August 2025, their multiples, like their price-to-free cash flow of 46.94x, appear elevated on an absolute basis, especially after a remarkable 65% plus stock rise over the past year. This performance suggests the market has already priced in a lot of positive news regarding the company's growth prospects and record backlog. It implies a pretty forward-looking valuation.
So a simple peer comparison might not be enough, or you can't just lump them in with one type of company.
Exactly. Due to BWXT's truly unique business mix, a single peer group comparison is simply inadequate for a comprehensive valuation. A more insightful approach is to benchmark the company against several distinct peer groups, corresponding to its different lines of business. For its core naval business, relevant defense peers would include prime contractors with significant naval exposure, like General Dynamics or Huntington Ingalls, HII, or even government services firms like Fluor. BWXT likely trades at a premium to these more traditional defense peers, reflecting its sole source status and higher margin profile. In the commercial nuclear space, peers could include SMR pure plays like NuScale Power or uranium and fuel cycle companies like Cameco. And for the BWXT medical segment, a relevant peer group would include radiopharmaceutical and medical imaging companies such as Lantheus Holdings, which often command higher valuation multiples due to their exposure to the high-growth healthcare sector. This segmented peer analysis is crucial for a complete picture, allowing you to value each component more accurately.
That makes a lot of sense, breaking down the company into its constituent parts for valuation. And for intrinsic value, a discounted cash flow analysis would be the go-to, I imagine. What are the key assumptions there, given that blend of stable and high-growth segments?
Yeah, a discounted cash flow, or DCF analysis, provides a view of the company's intrinsic value based on its future cash-generating ability. For BWXT, the assumptions are particularly critical. Key assumptions would include a detailed revenue forecast driven by converting that $6 billion backlog in the near term, with long-term growth based on new naval contracts, the pace of SMR adoption globally, medical isotope market expansion, and the eventual commercialization of space tech. A crucial assumption would be the evolution of margins in the commercial operations segment. You'd likely assume stable, high margins for government, but then model a gradual improvement in commercial margins over the forecast period as those businesses scale and become more efficient. Capital expenditures would be modeled at their guided 5.5% to 6.0% of sales near term, potentially moderating later as major expansions complete. The discount rate, or WACC, weighted average cost of capital, would need to carefully reflect the company's blended risk profile, balancing low-risk government with higher-risk commercial ventures. Ultimately, the output of a DCF model will be highly sensitive to those long-term commercial margin assumptions and the chosen discount rate.
Right, sensitivity is key there. Ultimately, what does all this mean for someone trying to understand the potential of BWXT? It really boils down to a classic bull versus bear case, doesn't it? From a bull perspective, what's the strongest argument for BWXT?
Yeah, the bull case primarily rests on their fortress core business. The government operations segment provides stable, high-margin, and credibly predictable cash flow. It's largely insulated from economic cycles due to its sole source mission-critical nature for U.S. national security. This strong defensive foundation provides the capital.
And then they have multiple growth levers, right, building on that foundation.
Exactly. That incredibly consistent cash flow is being intelligently reinvested into three distinct and powerful secular growth trends, allowing them to de-risk their expansion in a way. First, the global clean energy transition through SMRs and plant life extensions. Second, advances in healthcare via life-saving medical isotopes. And third, the burgeoning new space race, particularly through nuclear propulsion and microreactors. These provide diverse long-term growth vectors.
And that record backlog must make the growth seem somewhat de-risked, at least in the near term.
It certainly does. The record $6 billion backlog provides exceptional near-term revenue visibility, effectively de-risking forecasts for the next several years. This allows investors, or anyone studying them, to confidently underwrite the stable core business while gaining exposure to the significant upside potential from the commercial, medical, and space ventures as they mature. It gives them a clear path forward.
Okay, that's the bull case. Strong core, multiple growth shots, good visibility. What about the bear case? What are the key counterarguments or potential pitfalls a skeptical observer might point to?
Well, the bear case primarily highlights the overwhelming customer dependence. Their heavy reliance on the U.S. government is, without doubt, the single greatest vulnerability. Any significant shift in defense policy or a reduction in the naval shipbuilding budget, however unlikely in the current geopolitical climate, could severely impact their financial performance.
And that margin risk in the commercial segment, we touched on that. That's a concern for the bear case, too.
That's a key point, yes. The growth initiatives in commercial operations, while promising, currently operate at significantly lower margins than the core government franchise. There's a risk that as these businesses grow to become a larger portion of revenue, they could dilute overall corporate profitability if they fail to achieve substantial margin expansion through scale and efficiency improvements. Additionally, fixed-price contracts across both segments carry inherent cost overrun risk. And finally, there's the challenge of long-dated payoffs. The most exciting growth opportunities, particularly in SMRs and space propulsion, have very long investment horizons. It may take many years or even decades for these ventures to generate material revenue and profits. There's a risk that technologies may not be adopted as widely or quickly as anticipated, or that competing tech emerges.
Long time horizons. Patience is needed.
Definitely. And this raises an important question. How durable are these competitive advantages in the long run across all their diverse segments? In the government segment, the moat is exceptionally deep and durable, thanks to sole source status, high security requirements, specialized facilities, decades of IP. Their position is nearly unassailable there. But in commercial markets, while their technical expertise and manufacturing prowess are strong, they face well-capitalized and established competitors who are equally innovative. So success in these areas depends on their ability to continually compete effectively on technology, quality, cost-effectiveness, and market execution.
So, what does this all mean for the long game? For you, the listener, trying to piece together the future of BWXT, what's the ultimate takeaway for the long-term outlook?
Look, the investment thesis for BWXT is fundamentally a long-term one. The stable naval business provides an incredibly solid foundation and a growing dividend for patient investors, offering a steady, predictable core. However, the full realization of the company's potential value is contingent on the successful execution and scaling of its growth initiatives in commercial nuclear, medical, and advanced space and defense tech. This process will unfold over a multi-year and, in some cases, multi-decade time frame. Anyone studying BWXT should be prepared to adopt a long-term perspective, focusing on the company's steady execution in its core business while diligently monitoring the key milestones that will signal the maturation and success of its high-potential growth ventures. It's a journey, not a sprint.
You know, what really stands out to me from this deep dive into BWXT is how one company can be so deeply entrenched in something as foundational as national security, providing the very heart of a nation's defense, while simultaneously pushing the boundaries of clean energy for a sustainable future, developing life-saving medicine, and even enabling humanity's journey to the stars. It's a powerful and truly unique blend of stability and innovation.
It really is. And if we connect this to the bigger picture, it raises an important question, doesn't it? As AI and other energy-intensive technologies drive unprecedented global electricity demand, and as geopolitics continue to reshape energy independence goals, will companies like BWXT, with their deep and unique nuclear expertise, become the silent, indispensable infrastructure providers of the 21st century in ways we're only just beginning to comprehend? What stands out to you listening now as the most surprising or impactful aspect of their business?
Something to think about. Thank you for joining us on this deep dive. Until next time, keep digging into the fascinating world around you.